Tesla stock is up more than 23% since the company reported quarterly results last week. Joining us now with more on Tesla, Colin Rusch, Oppenheimer senior research analyst. I thought it was somewhat disappointing, some of the stuff that we heard from Tesla. Why did the stock perform so well? I guess it's in the eye of the beholder.
Yeah, there's a couple of things. One, the gross margins on the auto side were better than expected. And it's pretty clear that the company is self-sustaining from a cash flow perspective. And as they continue to grow as an EV maker, and we continue to be very bullish about their EV technology, it extends the runway on their ability to deliver on the autonomy opportunity. And while we have some caution around that autonomous technology, I think folks started giving them a lot more credit for that runway and their ability to deliver on that promise.
Colin, if you were just looking at the prospects for selling cars, selling Teslas around the world for premium prices, I mean, that part of it is it, would that cause you to buy the stock here? I mean, and even some of the profit being so profitable, but a lot of it had to do with that pure profit the company gets from selling those environmental credits to other automakers.
Yeah, I mean, when we look at it, it was about a little less than $800 million in credit revenue that they had in the quarter, and so there's a meaningful contribution to their net income from those credits, and that comes from multiple geographies. But at the end of the day, we look at least half, if not more, of the value being ascribed to their AI opportunity, and particularly autonomy as the first application within that AI bucket. And so for us, the EV opportunity is meaningful. They're executing on it well. They continue to drive costs lower and have great products. But the AI, bucket of profit pool that they're trying to dip into here is really what's driving the value in the stock. And we think they're further off from actually being able to deliver on that than what the stock is saying at this point.
If it does go, Colin, and I think that, we were a little bit surprised maybe that 30 trillion, that someone would even mention that number for what the company could be worth. And then Andrew said, well, why stop at 30, right? I don't know. You figure that's like Austin Powers.
Like terminal value? I mean,
why talk about trillions when you can talk about billions? But how much, what would that entail? How much would be the car business to get to anywhere, let's say a multiple of what the market cap is right now? How much of that will still be electric cars, and how much of it is going to be everything else that gets under the Tesla umbrella?
We're really looking at the potential for them to grow into, $5 to $6 of earnings by 2027, 2028. And so if you put a multiple on that in the high teens, you can get yourself into the $100, maybe $120 range for the stock. We're looking at the energy storage business at worth $20 to $30. And then the balance of the stock price here is really being driven by the AI potential. And they certainly have a very capable engineering team that's working on these opportunities. But it really comes down to when and what the competitive environment looks like. And right now, from a regulatory perspective, they're certainly behind. From a cars on the road perspective, they have more vehicles on the road, but not vehicles that are actually driving themselves. And so the testing process is going to take a fair amount of time before they can actually start monetizing that in a real way.
What about China, competition from China? How's that going to play out? Does it matter who's elected?
At this point, you look back at history and look at what happened with Japanese automakers, Korean automakers. You really end up having to make vehicles locally in domestic markets. And so the question is, what's the technology underlying that? And we're seeing the OEMs in both Europe and the U.S. make significant investments on driving cost reduction. And I think limiting some of the competition. I think the European market is a real example of what may happen, where we see BYD starting to penetrate that market in a little bit bigger way, but starting to actually manufacture in Eastern Europe and Turkey. In the U.S., I think it's going to be hard, in this political environment to really see, Chinese automakers start to penetrate this market in a timely fashion that would start to take share from some of the existing manufacturers that are already here.
Did you know he was going to say no $25,000 car? We're just going to go straight to the.
I think we already understood that at the point that they said we're going to go to the the version V2.5 and kind of get halfway there on the existing platform. It just doesn't make sense for them to go to that low end vehicle, especially when you can start monetizing some of the ADAS functionality at a little bit higher rate. I don't think they really need to drop down to those price levels to continue to grow. And we actually had units growing ahead of our peers on the street here in 25 and 26. And I think they'll continue to grow into that opportunity. They do have better EVs than most of their competitors on the road at this point.
Right.
And I don't think they need to drop down to that low end to really drive volume into the 3 to 4 million vehicle a year range.
Okay, great, Colin. Your price target? Where is it?
We're perform rated, so we don't have price target here. And this is a stock that we think is kind of in no man's land right now.